Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Risk assets tumble as President Trump threatens more tariffs on China and confirms levies for Canada and Mexico will go ahead next week. Beijing says it will take all necessary countermeasures to defend itself. Donald Trump says he will restart long-stalled trade talks with the UK after hosting Prime Minister Keir Starmer at the White House. Plus, earnings crossing the terminal from British Airways owner IAG. We will bring you those numbers ahead of our exclusive interview with the CEO.
In the meantime, a quick check on these markets here because Euro Stoxx futures are taking a massive hit down over 1.2%, almost 1.2%, we'll call it. This is quite normal. We are starting to see at this time on Fridays a little bit of a sell-off into the weekend, one that gets paired perhaps going into the opening trade. We'll see if that pattern continues. Weakness in the euro, weakness in the peso, and of course weakness in Bitcoin as well. We're going to dive into the details. The countdown to the opening trade starts right now.
Good morning. Friday the 28th, final day of the month, and boy, has it been a bad month for risk assets. That story is accelerating into the end of the month. We've seen a significant sell-off in the United States. That came yesterday, overnight in Asia. We're now expecting to be seeing that similar story here in Europe this morning. A combination of factors, Kriti, coming together to make people a little nervous.
To make people a lot of nervous. But you made this point earlier, I think a couple weeks ago, that going into Fridays, Europeans especially and Americans aren't taking that weekend risk. So there is this element of kind of the tariff scare as well. And you're seeing that in the currency market. There's also an element of we don't know what this weekend will bring.
Yeah, absolutely. And just to recap, we've got another 10% tariff then on China. That is what President Trump has most recently talked about, and that's what spooked markets. And as a result of that, we're down on equities. We're certainly down over in the US, S&P down 1.6% yesterday, Asia down by more than 2%. You made the point, though, Guy, that lots of risk assets are selling off. Bitcoin has its own reasons, but also just sells off with this lack of risk appetite.
So there seems to be a change in tone. So investors expected Donald Trump to be good for the economy, broadly good for markets. That was what the initial Trump bump was basically all about. That is now unwinding. There seems to be a sense now that maybe actually that's not the case, and that actually Trump may be negative for markets and for the economy. You're already seeing it showing up in consumer confidence. We're going to get PCE data a little bit later on as well. There's concern around tariffs and what that's going to do to inflation, potential government shutdown coming next week.
Yeah.
You've got a whole range of factors coming together, plus Doge is something else you want to throw into the mix as well. Is that going to start showing up in the employment data?
Yeah, is this, though, a global growth concern? Because there are fundamentals to it. Or is it just uncertainty? Is it the push and pull of, we'll get tariffs on March 4th. No, we'll get it on April 2nd. No, it's coming off altogether. It's that kind of volatility that I imagine is feeding more of this.
And I think it's the fact that also these things are coming really quickly, aren't they? There's 10% on China, then there's another 10% on China. And it's difficult to get a sense of, OK, are we there now? Have we got our hands around what's going on here? And the more we hear from the US, the more retaliation risk there is. And the retaliation the first time from China was really quite measured. There is expectation that it will be less measured the second time around.
But if you're sitting on a trading desk, if you're running a portfolio, you have to, at this point, look at the tails and assume that actually you need to factor and assume that maybe the kind of the risk of those tails becoming a reality is growing. As a result, you have to change your positioning. The CTAs have really shifted as well. So there's a definite momentum shift in the market too. So from a market narrative point of view, it does seem as if the game has changed a little bit. And that's probably most reflected, you could argue, in crypto.
Well, and as you were speaking, we also just got a headline that the Hang Seng China Index has been extending its loss to 4%. So for the folks who are saying tariff risk is priced in, maybe it isn't. And maybe there's an exception to it in the UK.
Yes, absolutely. We're just getting some interesting lines on China, which perhaps we'll come back to because it ties into what we were just talking about. But let's go to the UK because this was really interesting overnight, wasn't it? The Starmer visit to the White House. Now, did he come away with US assurances to provide aerial intelligence, surveillance and air cover to European troops in Ukraine post any peace deal? No, he didn't come away with that. So in that sense, that could have been disappointing if anyone was expecting that he would be able to achieve that. But we moved from that meeting, which certainly did have a lot of positives around the mood between the relationship between them, and to some reassuring lines on NATO. We move from that to a meeting with Zelensky today, and so we look to that to see if we get a better mood there as well, because the president was talking in slightly better terms about President Zelensky as well. And then the UK does have a commitment to restart trade talks. So, you know, Guy, we get back to talking about chlorinated washed chicken and hormones in beef.
I was trying to think about this as I came in this morning. What's the message from Canada and what's the message from Mexico on trade deals? Like, really?
Yeah.
Are they worth the paper they're written on? Because certainly they seem to be a little flexible when it comes to the Trump administration in terms of the approach to those trade deals.
If you even get to them, because this was difficult to do under Biden, therefore didn't happen. And whether you can do it under Trump is another question.
Well, I think we're missing the highlight here, which is he got a second state visit to Buckingham Palace.
Unprecedented.
Unprecedented. It's enormous.
This has never really happened. The words coming out of Keir Starmer yesterday. Yeah, really incredible stagecraft.
The UK really feeding the American obsession with the royals. I thought that was
the American and Trump obsession. Clearly. They worked out well. I thought actually Starmer did quite well.
Yeah.
Considering the options that were there, actually I think for once there's been a lot of disappointment with Starmer in terms of what he's delivered thus far as Prime Minister. I thought actually he had a fairly good day yesterday.
Yes, if you look at his ratings in the UK, I think he's very popular in the White House. Anyway,
there you go. Well, I was going to say, you talked about the farm pieces. There's also the defence component as well. We know that the UK does get carve-outs in terms of those defence contracts, so that's one to keep in mind.
I'm going to stay with the transatlantic theme, but pivot to IAG, which is, I think, logical. You can look at the numbers this morning, which are very strong. This is a stock that's had an incredibly strong run. Remember, this is British Airways, this is Aer Lingus, this is Iberia. This is a sort of combination of companies, operating companies under the ING umbrella. The stock has had a massive run, certainly compared with Lufthansa. This morning, the headline that really strikes is that IAG is announcing a share buyback of up to €1 billion within the next 12 months. That is a real vote of confidence in the fact that the current business climate is going to persist. It is painting a very positive picture. The operating profits, the net line, all exceeding expectations. The capex line looks fairly okay as well. The revenue line, very strong. So this is a company that is delivering at the moment. And in stark contrast, you look at IAG versus Lufthansa, very different picture.
And this is, to your point about this being a transatlantic story, this is a business that certainly always used to get a lot of profitability from that transatlantic route, and it
really is at the moment. It's been a differentiator.
Yeah, even without business traffic back to 100% of what it was pre-pandemic. So that's always been a really. So if this is any kind of echo of the strength of the US economy, then that's interesting as well.
But that's the IAG story. Why the underperformance from Lufthansa relative to IAG? Is it just that business route, or is there something else to it?
Well, it's been a whole range of factors in terms of the way. What is happening at Munich Airport today? There's a strike, okay? So Verdi is going on strike today. So it's had an ongoing labour story, which has been a significant problem for Lufthansa. It has not been able to drive the efficiencies that maybe IAG has out of its business as well. IAG has also now repaid all of its COVID loans, so that's a story that they can put on the back burner as well. So some really key differentiators. Fleet is also another factor. Lufthansa has really struggled with its fleet and what it's able to deliver. They've all struggled with this, but Lufthansa in particular. So there's some real key differentiators between what is happening within this European space.
And that is going to be one of the conversations we will have today.
Luis Gallego is going to be joining us a little bit later on, the CEO of IAG is going to be joining us exclusively from Waterside. He'll be joining us very shortly. Laura Cooper from Nuveen is going to be joining us as well. We'll talk about these markets. Miljan Gutovic, the Holcim CEO, is going to be joining us to talk concrete. Anna's very excited.
As ever.
As ever.
It's Friday.
It's Friday. They're spinning off their US business, which is a really interesting trade as well. And Christophe Perella, the Valeo CEO, is also going to be joining us in another exclusive conversation too.
We're going to talk a lot about that US impact, the tariff impact on all of those conversations. Plenty of data coming up ahead as well. At 10 a.m. UK time, we do get Italian CPI, but I think the highlight for the European economy, maybe those numbers coming out of Germany, some state, some regional data coming out about 9 a.m. UK time. But the big one that you want to keep an eye on is at 1 p.m. And then 1:30 p.m. UK time is that US PCE data. And you talked about this earlier, but this is perhaps the early indications that we might get if we're looking for cracks in this economy, especially because the PCE inflation, the income story, and the spending story may echo some of the fears around the consumer confidence data that we got earlier in the week that had moved these markets.
So which is more important in this data? What are we looking for? Are we looking for the inflation component, or are we looking for signs that maybe the consumer is beginning to crack? Because the market kind of, the needle in the market's compass seems to be pointing back maybe towards growth concerns a little bit more. So I wonder where the focus will be this morning.
That seems to be the message we've been getting this week. I mean, I was reading a lot of the analysis ahead of the PCE data, and I have to say I'm not entirely sure still what the market is really expecting. There seems as if there could be something for everybody because, you know, month on month it's moving in one direction, year on year it's moving in another direction. So I feel whatever your view on inflation, might this be one of those data pieces that you can just turn it to your advantage?
I mean, the market almost certainly will, right? They're going to find it's not just the PCE numbers, but the income numbers and the spending numbers, to your point. But I think it brings back this question is, does the market get back into a position where they're front-running the Fed to such a distance, such a divergence, where they're saying, okay, well, the Fed is still wrong to be looking at the PCE data. Hypothetically, this is a narrative that could come out. Should they be looking at things like personal income, spending, consumer confidence to address those growth concerns?
Yeah. The concern is that the inflation story is still strong enough that the Fed can't go all in and focus on the downside risks surrounding the economy, i.e. it's late to cut because of the inflation story. What else do you need to know this morning? Let's get back to the AI story as well, which is one we need to focus on too. Tencent has become the latest Chinese tech firm to roll out a new AI model as the industry races to compete with DeepSeek. The last month has seen competition really heat up on both sides of the Pacific, with both Baba and OpenAI also pushing out new products over the last few days. Staying in the AI space, Meta is said to be in talks with Apollo for a $35 billion financing package to help develop data centers in the United States. Sources say the alternative asset manager has discussed providing a major part of the financing. KKR is also said to be understood to be part of the investor group. Meta has already laid out plans to spend as much as $65 billion on projects tied to AI this year. And Bitcoin has fallen nearly 25% from its all-time high set 6 weeks ago. The cryptocurrency dropped by as much as 6%. We're now below $80,000, as you can see on the screen. Broader digital assets have also been in decline. Ether, take a look at Ether, Solana, XRP, all down sharply. Traders seem to be reversing bets on these assets made following the election of Donald Trump, amid worries that the president's combative stance and broader concerns about the US economy are something that investors now need to focus on. There's some interesting levels coming up. So if crypto gets below some of these key levels, I think it's sort of circa 74, 76,000 in terms of where the Bitcoin level is. Does the buy the dip mentality come out of the market? Because the buy the dip mentality that's in crypto, which has been there, also feeds through into other areas, equities in particular. And you do wonder whether there's some sort of cross-contamination that could come out of crypto.
Well, it does act very much as this sort of risk asset barometer of risk, doesn't it? And when you see things like Nvidia down, 7-8% in yesterday's session, no surprise then that the people who are selling Nvidia might also need to take some profits on a Bitcoin position as well. You know, there's often that read across, isn't there, from a retail darling like Nvidia. Obviously a favourite of institutional investors as well, into something like Bitcoin. So the linkages between the two are really interesting.
Yeah, and the chart is almost tick by tick, quite similar. And you see that in some of the other kind of Trump-friendly assets as well, even on a micro basis. The other piece I'll add to this is there's a momentum trade there, there's a fundamental trade. There's also a little bit of an energy and a cross-asset kind of dollar trade that's baked in there. And gold, of course, has been the darling as well. And we've seen Bitcoin and gold move up together, but gold kind of stay put, whereas Bitcoin has come back down.
I also think, I mean, the Trump trade was attached to Bitcoin for very good reason, because he is such a fan of crypto and he has his own. That didn't go down too
allegedly.
Well. But he's also expected to do a lot for this industry, and he's so busy on other fronts that maybe he hasn't done what they would like him to do by where are we, February 28th. Maybe they were expecting more.
But if you're looking for a sort of a canary in a coal mine, is this it? Is this the shift in terms of investor sentiment? Is this something that you really want to pay attention to in terms of the way that it ripples out across? And is this the first sign that maybe actually people really don't believe, to your point, Anna, that the Trump trade is going to be as good as people had anticipated as he came in? And if that's the case, then maybe we're just in the early innings of understanding how far the ripples could go.
Yeah, or did it start with the tech sell-off in US stocks? Is it sort of linked to that? Something we will continue to explore during the programme. Of course, coming up, we will talk about the politics too. UK Prime Minister Keir Starmer is set to host Ukrainian President Volodymyr Zelensky and over a dozen European leaders in London this weekend. We'll discuss what to expect from this really important gathering. Plus, German insurer Allianz announces a €2 billion share buyback programme after reporting better than expected profit. More on that and your stocks to watch ahead of the market open. Up next, we will be joined by Stefan Dorfler, the CFO of the Austria-based lender Erste Group. We'll talk about the earnings. We'll also talk about geopolitics in that region. If you have any questions, please get in touch. IB plus BBTV Go. Join in the conversation this Friday. This is Buyback.
42 minutes to the opening trade. There's a bunch of stocks we need to be focusing on this morning. That is the futures picture, as you can see, fairly negative. But it's going to be interesting to see how some of the single stocks that are announcing numbers this morning fare in this kind of risk-off environment. Are we going to see some surprises to the upside as well? Let's find out. Let's talk to some of the CEOs, CFOs that have been reporting numbers this morning. Let's kick it off with Erste Group, the bank reporting fourth quarter net income that missed estimates. The revenue line actually is ahead of estimates. The Austria-based lender says it will target a shareholder payout of 65% on its €3 billion of adjusted net profit in 2024. Things that are worth focusing on, NII has held up quite strongly, but is it going to continue to do that into this year? Well, let's find out. The group's CFO is Stefan Dovler. He joins us now. Thanks for your time this morning. Let's start off with NII. Is there any surprise that it's held up as well as it has, and does that continue?
Good morning from Vienna. Yes, the answer is yes. It was really, at the beginning of the year, one of the concerns that NII might be slowing down and that we will not be able to deliver as good numbers as in 2023. But we did even better. And that's, of course, now the key question, how we will be faring with the NII developments in 2025. Our clear expectation is that we can hold up this level to this level, and our guidance will be a kind of flattish NII going into 2025.
You've announced a €709 million share buyback, but you're talking about having room for M&A. Talk to me about the M&A story.
Yep.
Where do you see that? If you've got room for M&A, where are you looking?
Well, it's very clear where we are looking. We are looking at the Central Eastern European part of the European Union. This is our target region, is our home region. That's where we are. That's where we want to grow. There we want to be a consolidator in the markets where we are already performing. And the other market that we are looking at is Poland. It's a very, very challenging market, a big market. It's not so easy to identify targets that we can on the one hand afford, and on the other hand that might be available. But this is exactly the geography that we are looking at. Central Eastern Europe in the geographies and the countries where we are already, and Poland as an interesting market for extension if there is a good opportunity arising.
Stefan, good morning. It's Anna. I wanted to ask you, you're clearly pleased with the NII performance, and you're suggesting that that stays pretty flat this year, but fees will grow faster, and we've seen a lot of banks focusing on growing fees and trying to reduce their exposure to interest rates or the read across from interest rates. How far can that go? How big a portion of the business do fees become?
Well, Anna, I cannot speak for others. I can speak for us. And we have been showing a really very impressive track record on fees in the last couple of years. This year, again, growing this income line double-digit, which is really a very, very strong delivery. And we might be missing some of the inflationary tailwinds in the year 2025. We are guiding for mid-single-digit growth in fee income in 2025. Honestly speaking, I might be even a little bit more optimistic, since this is a strategic focus and we are able to grow fees not only in specific areas here and there, but we are growing them across the board in all the countries and in all the fee types. That's what gives us the confidence that even in more shaky environment, we should be able to keep up with this track record, maybe not at these high levels as in 23 and 24, but certainly growth is our ambition.
OK, so some upside risk perhaps there then, Stefan. Thinking about risk and a very different type of risk and how it affects the business. Clearly, we watched geopolitics not too far from Austria and the other markets that you operate in, Stefan. I know that you don't operate in Ukraine, and I'm sure it's too early to talk about what any kind of peace deal will bring because we haven't got one yet. But how do you analyse the developments in geopolitics we've seen, and how do you plan as a business for that?
Well, first of all, if I may say, you would need to analyze 24/7 because things are moving very, very quickly. You cannot really read everything clearly given the current situation. I think you're covering this in your program anyway, so everyone knows what I'm talking about. Now, the Ukraine situation is challenging for us and has been challenging ever since 24th of February 2022. It has been improving insofar that people have understood where we operate, where we are not, and so on. Now, from a pure humanitarian standpoint, it's clear that everyone is hoping for peace and hoping for at least for a ceasefire. From an overall political sentiment, that's of course a more tricky question because there are fights associated. There are, of course, pressures building around all the stuff that is being discussed in big politics. So I believe that it's still going to be a very challenging way to have something tangible which would allow, and this is what I think you're aiming for with your question, to allow for a rebuild of Ukraine, which is in the interest of all, and of course also our colleagues in other countries, especially those which are neighboring the Ukraine. We are prepared for that. We would be ready to support, but I'm not 100% sure that we are there yet.
Stefan, it's Kriti in London. Just following up on that idea, what does a green light look like for you, not just in Ukraine, but perhaps in some of the other Eastern countries, as Anna mentioned, you do have subsidiaries in. What does a positive kind of geopolitical story look like in that part of the world?
Well, in principle, I feel that the overall developments in Central Eastern Europe, just look at GDP growth in Central Eastern Europe compared to Western Europe, this story is holding up. The convergence story on the economic side, I think, is absolutely clearly there, and we are very optimistic that it will hold up also in the next couple of years. Geopolitically, I guess there are many moving parts. The American position versus or towards Russia and Europe is definitely in a redefinition, and that remains to be seen where this leads to. I think personally that a strong Europe, a Europe which speaks, if not with one voice, at least with a little bit less voices than usual, should help, because this positioning will be essential in the forthcoming discussions, negotiations, and hopefully only fights at the respective negotiation tables and not beyond that.
Well, we look forward to seeing how that evolves. Stefan, let's talk about something perhaps a little bit more local to you, and that, of course, is the broad coalition you are now seeing in Austria. There is a policy measure, though, on the table when it comes to an increase in bank taxes, one that would put the burden perhaps over 3 times, or at least expected to, than the current rate. Can you walk us through what that looks like for you and how much margin pressure that puts on your bottom line?
Yeah. Well, first of all, it has been now exactly 5 months since we have been voting in Austria. So it was the 29th of September. So it seems that now with more or less, there was a press conference yesterday. I understand that beginning of next week, the formal introduction of the new government will happen. That's in itself a positive, because obviously we've been living in a kind of intermediate period for quite long, and maybe too long. By the way, let me allow me the side comment. I hope that in Germany things will develop faster. Now, what does it mean for us? We were expecting such a measure. It has been broadly discussed publicly. The dimension is, of course, not making us in any form happy. We have to calculate the numbers yet and see how the concrete implementation will happen. It's something that is not very helpful. I personally don't believe that those measures are really creating value for anyone ultimately. But for us, it's digestible. We will incorporate into our numbers. I don't think that the market will be very much surprised. The market knows about these measures. So, yeah, we accept it and move on.
Stefan, just very quickly, just get your take on this. Do you think peace in Ukraine would deliver a bigger benefit to Europe versus the hit that we could see from tariffs coming in from the United States? How do you think about the various risks, upside and downside, that are facing Europe at the moment?
Wow, this is a very, very tricky question where I wonder who can comprehensively answer it. Let me give you my view. First of all, although I've been in the business for such a long time, I have no experience with really the, so to say, the sensitivities around the tariff plans. First of all, we don't know what will be really implemented and what the impact will be. I'm fundamentally not a friend of those kind of measures. From a principle statement, we have to accept that they are around. By the way, they have been around also for a while, and no one has been talking about them. So I'm personally a strong believer in cooperation, in a global trade concept based on fairness and competition. So I cannot judge how the impact will be out there. At the end, and this is, I think, what I'm also definitely pointing to with your question, at the end, a lot of political matters will influence the economy, and that we have to deal with. It's a challenge, but we have to live with it.
All right, Erste Group CFO Stefan Dörfler joining us this morning. We thank you so much. Coming up, we're going to bring you an exclusive conversation with CEO of Swiss building materials producer Holcim off their spinoff in the North America unit, but also a little bit of those growth concerns we were just discussing. More on that next. This is Bloomberg. 30 minutes away from the start of the opening trade. When you look at the futures picture, it's worth noting that we are on a Friday. It is a Friday. We are going into a little bit of a weekend, and there is tariff risk on the horizon. That being reflected in the futures picture. Your Stocks 50 futures down about 1.3%. The CAC right on its heels, down about 1.1% as well. Worth noting that the DAX is also taking a massive hit as well. This is, of course, following weeks of outperformance. But S&P futures across the Atlantic seeing a little bit more green on the screen, or at least we did. It's flat at the moment, but again, not the same kind of weights that we saw in the rest of the continent. In the bond market, you are starting to see, I'm not even going to call that a bid, but a slight yields lower. We're going to keep everyone apprised of how that bond market story unfolds.
We will talk about the earnings story next. Let's do that when it comes to the construction sector. Holcim has posted full-year sales results that met average analysts' estimates this morning. The Swiss building materials producer also announcing that its North American business is to complete its planned spin-off by the end of the first half of this year. Joining us now to talk about the numbers and other matters beyond, Miljan Gutovic, who is the Holcim CEO. Miljan, thank you so much for joining us. Very nice to have you with us. I'm just looking at how your numbers compare to estimates. And you might have your own views on whether the estimates were realistic or not. But just looking at the sales numbers for the fourth quarter, the organic sales number looks a little lighter than the market was anticipating. Is there a story in there? Is there something happening, or were the estimates just wide of the mark?
Good morning, Anna, and thanks for having me. We are very pleased to report another record year, and yes, we have achieved great results from record EBIT of 5 billion to significant expansion of our industry-leading EBIT margin by 150 basis points. So 2024 was indeed a very significant year for Holcim.
Yes, I'm just looking at the fourth quarter organic sales number, up by 0.9%. The estimate was for something more like 1.7. Is there any slowing in the business, or were these estimates just unrealistic?
We have not seen any slowdown in the business. We have been challenged by some external factors, especially in Q2 and Q3 in some of our key markets. We had some unpredictable weather conditions. In some markets, residential sector is slow, but all in all, our margin expansion, our absolute EBIT growth was driven by our strict focus on our strategic priorities.
Miljan, before we go into some of the strategic priorities, I just want to ask a little bit of a big picture question here in Europe, because there is a question of how energy prices are feeding into that broader picture. Have you seen an impact on your business, or expecting perhaps an impact on your business, any sort of rise in the energy price story?
So far in 2024, we have not seen any significant impact. In our business, our biggest cost item is logistics, and this is what we are working hard on to improve efficiencies and to reduce the cost. But energy so far has not been a significant cost item.
Miljan, what about labor? What about the idea of potential labor shortages, specifically in the United States? Is that something you're worried about?
Kriti, we had experienced some minor issues. That was mainly in 2022, but in 2024, everything is back as it should be.
Miljan, let me just talk kind of another big picture question. Let's talk about tariffs. Do you think there's a tariff impact that you're going to see? Do you think that the global fragmentation that we are currently experiencing is going to be something of an issue for Holcim, or is production so local that you don't see an effect coming through?
Guy, it's a popular word these days. However, for Holcim, it doesn't mean much, because Holcim is producing locally, we are sourcing locally, and whatever we produce, we sell locally. So for us, the impact from tariffs is negligible.
Can I just talk to you about something else that's kind of tangential, I guess you could argue, and that is some of the rebuilding efforts that we're going to be seeing around the world. We've seen significant fires in California. Is that going to be something that requires extra concrete, extra building materials to feed into? We've obviously got the rebuilding potentially of Ukraine as also another significant story. You don't operate there, but you do operate close to there. Is that going to be something that could impact you in 2025 as well?
So, Guy, let me start with Ukraine. Let's hope this war stops sooner than later. We do not have operations in Ukraine, but we do have a strong production footprint in neighboring countries. So we will be able to supply from Poland, Romania, from Moldova and Hungary. And yes, regarding the US rebuilding of California, unfortunate events. However, the next build has to be more durable and more thermal efficient. And this is where Holcim can offer a full solution from foundation to the rooftop.
Miljan, can I ask you about the spin-off that you've given us more details of today? So the Amrise business, you're planning to complete the spin-off by the end of the first half. What do you plan to do on the other side of that spin-off? Where will that take the business next?
So it's exciting times. Amrise was born last week. We are planning to complete this project by the end of H1, and this is unleashing the next chapter of growth on both sides of the ocean, Atlantic Ocean. Europe, the driver will be sustainable building solutions. LATAM is our most profitable region, and we do have the highest EBIT margins in LATAM. The growth in LATAM will be driven by population growth, urbanization, government spending, and we are really excited about the Holcim after the spin-off and the opportunities we can have across the whole geographical footprint.
Yeah, thinking about the US business and what you're seeing there, Miljan, we're having a conversation at the moment about whether the market's concern has switched from being focused on high inflation to being actually nervous about growth. Are you seeing any of your customers in North America a little unnerved perhaps by the volume of news flow, by the fast-changing geopolitical situation, by anything that the new Trump administration has brought in? Do you see any signs of nervousness and a reluctance to spend at all?
In fact, we see it opposite. We also reported that we have currently more than 200 projects ongoing in US. And if you talk about the Trump administration, they are pushing for simplification of permitting when it comes to these big mega projects. And also they are talking about enhancing public and private partnership. And we strongly believe all of this will be beneficial to Holcim Amrise as of H1.
Miljan, you mentioned that LATAM is one of your juiciest businesses in terms of the EBITDA. There is a question here of what happens next with some of Cemex's assets in Colombia. Is that an asset of interest to Holcim?
We did acquire some assets already in 2024 with the entry in Guatemala and later on in Peru. Yes, we are looking at several opportunities, and if it makes good business sense, we will go ahead with it.
What would an attractive price on that look like for you? What is a green flag when it comes to that potential asset?
Here we have a very disciplined approach. We are looking at the payback, and after the synergies, the multiple between 5 and 6 times.
All right, Miljan Gotovic, CEO of Holcim, we thank you so much walking us through a little bit of how he sees every single part of the world. I thought it was interesting. He's talking about LATAM being its kind of juiciest region, talking about potentially looking at assets there. But you look at some of the other kind of building materials companies, and it comes back to the point that Guy made, which is the focus for infrastructure investments may actually be in the United States and maybe in Europe.
Yeah, well, Miljan, very positive about the things they're seeing from the Trump administration in terms of simplification of permitting and what that might do to the construction industry. So it's that kind of stuff that maybe he's seeing at that particular coalface and that strength that he's seeing there. Interesting, though, if we do see this, the stock might be a little weaker at the open. Yep. That's what the indications suggest. I mean, that fourth quarter sales number did look a little less than had been anticipated by some analysts, but there might not be that many forecasts in
I think
there.
you've probably got to back a market story out of that as well. So if the market's down 1.5%, it'll be interesting to see kind of, I think, once you factor that in, just how much of an underperformance you actually get here. I think it could be pretty much in line with the market, it looks like, Holcim. There is a potentially huge construction boom taking place in Europe. It is comparable. You think about sort of how wars end and the rebuilding process that takes place. You could also see something taking place also in the Middle East as well. There's a huge potential rebuilding story that could be taking place there. We don't know what the sort of geopolitical narrative around that is as well. But there is a significant rebuild story that I think is going to require an awful lot of concrete, an awful lot of energy, an awful lot of building materials. They look like they could be in a reasonably good position.
If they can keep the peace.
Precisely.
A rebuild story, kind of an excitement story about the potential peace deal, a Trump administration, but still caution. I think that's what we've heard from Erste Group and now, of course, from Holcim as well. So we'll see if that flows in some of the other sectors we're keeping an eye on. Speaking of, coming up, IAG seeing a fourth quarter profit beat and announcing, get this, a €1 billion buyback. It's in our stocks to watch next. This is Bloomberg.
Welcome back. This is the opening trade, Friday the 28th of February, and the futures picture tells a pretty negative story, doesn't it? We are expecting to be weaker. And actually, guys, this looks a little weaker than just an hour or two ago. A little, only at the margin, but it seems as if we are a little nervous about the tariff story. There's the hangover from Nvidia yesterday, all the tech selling we saw in the United States attached to that. But here in Europe, perhaps it's the tariff narrative and the way that it seems to be not static, but piling tariff upon tariff against China, and that's weighing on sentiment.
Just huge amounts of uncertainty, and it's really difficult for the market to deal with that. And increasingly, the view seems to be that actually Trump is going to be negative for the growth picture, and that is the narrative shift that seems to be taking place in the United States. We're going to get some really interesting data in the form of PCE a little bit later on. Do you focus on the growth bit of that, the consumer side of that, or do you focus on what is happening with the inflation? It's a similar story here in Europe. We're about to get French CPI. It was that conversation with Holcim was really interesting. Potentially the rebuild of Ukraine could be inflationary for Europe. Europe's experiencing slightly stickier inflation than we thought that we would be. Yeah. So if you do get a growth downside, can central banks react to that in the way that they would have done, or the way you would have expected them to have done?
And early signs of that the energy crisis is almost kind of seeping back in with very little for the kind of fiscal authorities to actually do. You mentioned the CPI there for France as well. Just the estimates here are interesting. You are seeing on a month-over-month basis 0.2% is the expectation, according to analysts across Bloomberg. The Bloomberg has surveyed a year-over-year expectation of 1% on these preliminary numbers. So we'll see if that is indeed what we get. But ahead of those numbers, we are seeing euro-dollar at about a 103.92. A lot of that, of course, coming from pressure in the tariff story there.
So French CPI is it's a little softer than anticipated, actually. If you look at the EU harmonised number, comes through absolutely flat. Now, that's a tick up from the negative number we had last time round, but is a little less than what we were anticipating. The year-on-year number comes through at 0.9. That's a little less than we were anticipating there as well. So a slightly softer print on the inflation front out of France, which is something that we really need to think about. Think about all the political turbulence we've also seen in France as well. We do also get final Q4 GDP, which just softens up a touch as well on the year-on-year number too, which is maybe worth paying attention to.
OK, so that's the story around CPI. Let's get to the broader market themes now. Mark Cudmore joins us, Markets Live Executive Editor here at Bloomberg, of course, to talk about these markets in 3 minutes. The sell-off in Asia gathers apace, Mark, and we see futures for Europe looking pretty negative now as well. Expected to be down 1% or so in Europe. MXAP in Asia down by 2.5%. So that's the MSCI Asia Index. So we are seeing this weakness. This is attached to tariffs and further expectation of tariffs from the Trump administration, and a fear, I suppose, about how extensive the retaliation will be from China. What do you make of the price action around this?
It's extremely negative price action. I think there are a number of kind of themes hitting at once. Obviously, tariff deadline is getting closer, and it was kind of confirmed yesterday. And not only do we have the Canada and Mexico deadline confirmed, we had this fresh one on China. So the trade war is escalating yet again, and it's getting closer to kind of crunch time. At the same time, we've got more negativity around US AI. And that's a theme that's been running since the DeepSeek news a month ago, as investors realize that US mega cap tech won't be the sole beneficiaries or the main beneficiaries of the AI boom. In fact, it'll be global. And in fact, China, Hong Kong tech companies will do extremely well out of it. That's been further fueled by recent news about Tencent's later AI also doing very well. Baidu's meant to come through next month. So people are realizing that discounted tech stocks elsewhere can continue to gain value, and very expensive ones in the US are going to lose value. Now, in the short term, we're focusing on the losing value because even Asia tech suffered today. So we got the tech getting hurt. The most successful sector of recent years has been US mega cap tech. It is still expensive after the drawdown. So there's more downside to come there, and it's being hammered home by Trump on his tariffs. So it's a very, very negative moment, which means people are just selling winners out there, including getting out of the losers because they need cash.
Mark, if Bitcoin is a sentiment indicator, how negative is the message?
Not too extreme yet. I mean, in terms of Bitcoin's off about 27, 28% from the all-time high in January. It had 20% plus drawdowns last year. So this isn't yet extreme in Bitcoin. The broader crypto sector has got destroyed, but Bitcoin itself is kind of par for the course. Another maybe 5 or 6%, then you're getting the biggest drawdown we've seen in the last 2 years, and that will be much more dramatic. I think what's actually happening in the biggest names in the tech sector in the US are more important. Your Teslas, and the other popular strategies like Palantir, MicroStrategy, some of that price action is very very negative. And I think they're going to have much more downside into the close today. So yes, popular trades are really getting thrown out. The one that's probably most obvious is recently we're seeing gold even suffer, where everyone agrees fundamentally it should go higher, but people are just getting out of those popular trades. And I think that theme has more to run.
Mark, it sounds like, to your point, there's so many different market themes hitting all at once, as you point out. But I'm curious about how this bond market is digesting it, given we've seen a 40 basis point move in the last 2 weeks in the Treasury yield. We're getting a headline crossing our terminal now that the German two-year yield is falling off the back of the French inflation data. What matters more for the European bond market? Is it the tariff story in the States, or is it the inflationary story right here in Europe?
I think right now, actually, it's about price action. That's not the answer I was going to say as I started that sentence. I do think tariffs is more important than the inflation story, to directly answer your question. But I think right now, today, and possibly going to next week, it's about position management, about risk reduction. So it's one of those times that we get, once a year, or once or twice a year, where price becomes the ultimate fundamental. And that's why don't try to look for exact fundamental explanations for every tiny move at the moment. It's about being safe.
Certainly seeing that positioning story show up in the Mexican peso, the Canadian dollar, and, of course, the yuan as well. We thank you so much. Bloomberg Markets Live Executive Editor Mark Cudmore there joining us for a little bit of insight. You get more analysis from him and the team. MLIV Go is the function on your Bloomberg terminal. Let's go from the macro to the micro and get our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So IAG reporting really strong numbers once again in terms of their profit and also a share buyback as British Airways continues to benefit from this strong long-haul travel demand. However, we can see this stock has more than doubled over the past year, so potentially some of that positivity priced in at least. And we have actually seen a few analysts downgrading the stock over the past couple of weeks, including Goldman Sachs, which said the valuation I got a little bit punchy for them. However, I am seeing it up around 6% on the Tradegate exchange this morning, so we should see that moving higher here in London as well. Then in terms of financials, Allianz is out really strong numbers from their core insurance business, mainly in property and casualty insurance, and also PIMCO, the bond fund, bringing in lots more cash as well, so a positive boost on that one as well. But it's a stock also that has done well over the past couple of years. We're up 50% on a 2-year basis, so we'll see how much of that positivity is priced in there. Then in terms of chips, it could be a negative day. Bear in mind we did see declines in most of these stocks yesterday, so we saw ASML, Infineon, those ones falling. But a lot of the losses in the US names did come after the close of cash equity trading here in Europe. So the Philadelphia index, the Philadelphia stocks index on the semis was down around 6%, the worst drop in a month. So I would expect to see more weakness in chips this morning. Then in terms of analyst ratings, we've got a few downgrades. We've got WPP cut to equal weight, maybe coming a bit late after that massive drop yesterday. Then Lanxess also cut in chemicals, and Logitech underperform at Bank of America. That one should be weaker in Zurich this morning.
Joe, thank you very much. Joe Easton from our equities team with some of those analyst changes. And we've got some corporate news we need to focus on, as Joe was just talking about there, and some earnings stories that we've been tracking here and talking to the CEOs. All of that really interesting because they all tie back into some of the big themes at the moment around trade, around reconstruction in Europe, if we could possibly, think about getting there if there is a peace deal that does hold. I think the market is clearly caught in a very negative mindset right now. The tariff story and the tech sell-off clearly in focus. But I thought there were some positives yesterday in the press conference with Starmer around security and around security for Europe. I mean, this is perhaps what we need to be looking for from some of these events. So President Trump asked about, if British troops get attacked, would you come to their aid? And there was that suggestion, yes, we would definitely back Britain in that situation, which does sound like a reassurance to NATO in some form.
He suggested they wouldn't need much help. The problem with what do you do if you're sitting there at a trading desk this morning? You've got that headline, you've got a more positive picture on the geopolitical story, but an economic slowdown in the United States is the tidal wave. And the sentiment story just seems to have changed.
Yes,
and
it has.
Really quickly.
And the market is really focused on it. And yet you speak to a Holcim CEO, which is construction, it's cement, it's concrete, it's all the things that other building materials, but it's all the things that matter when you're building stuff. And they're very optimistic and they don't see any sign of that slowdown.
But they're also not actively changing their approach in terms of investing. They're quite literally not putting their money where their mouth is. And I think the credibility piece is also crucial because, yes, to your point, there is that positivity from the conversation with Keir Starmer. Yeah. Does that change in a week's time? It's that volatility story of whether or not the narrative stays positive. Exactly.
Yeah. Mm.
So the market feeling really uncertain. The market really sort of struggling to get a sense of where the compass is pointing right now. So you just take risk off the table. I was talking to Bank of America earlier on this week. The suggestion there from clients certainly was that they are taking less risk in this market. The market's market participants are just trying to figure out what is going on, but the tail risks are so enormous at the moment that
won't they stay? Will they maybe stay that way? And that's the problem, isn't it? It's not as if you can say, well, by half year we'll know everything. We might know a little more about how this administration operates and its priorities, but we won't necessarily know the extent of all the tariffs.
The guardrails aren't there. If you've got a growth slowdown, but you've still got some inflation in the system, does the Fed cut? Does the Fed protect the market? The market's got really used to being protected from downsides. Yeah. Does the Trump put really exist? Is he willing to shake up the financial system in a way that maybe we hadn't anticipated? Is this idea of a Trump put going to be tested? If things start to really fall apart in the markets, will the president change course? At the moment, it doesn't feel like that.
It doesn't, but there's also, to your point, use that word, where do you hide out? Your traditional hedges aren't working right now, right? Your golds, your bitcoins, look at both of them, they're down this morning. Yen, the Swissy, they're having their own domestic inflationary problems. Your Mag 7s are too expensive to own, and everyone's kind of waiting for NVIDIA to put out some poor numbers in the next forward quarters. So where do you hide out? And it feels like in the last 6 weeks you find defensive has been the new defense.
Warren Buffett. Where's Warren Buffett?
in Omaha, Nebraska.
Front end of the curve. Super short, in cash effectively, waiting to see what happens.
I love the two answers to that question.
The two can be simultaneously true.
They are, I'm sure you're both right. Right, coming up on the programme, we will bring you that market open. We are expecting some negativity then for European stocks, how they respond to that trade nervousness. This is Bloomberg.
Friday morning, good morning. Are you ready? This is going to be quite the session. I think we're coming into the end of the month. I know we're coming into the end of the month. We've got a US session that's going to look fascinating a little bit later on. The session yesterday was really quite interesting. The sell-off at the end of the session over in the United States is what we've got to deal with this morning. Europe went out here. We've got to price that bit in as well. And there's been so much news overnight as well. Just look at what has happened out in Asia to that session. I appreciate it's probably a reflection of the US as well, but there's a forward-looking kind of element to it too. Plus, we've had French CPI. Kriti, there's a lot to price into this market this morning.
There's a lot to price into this market, and as you said, perhaps a little bit of catch-up from the U.S. session yesterday. I think that's being most fully reflected over here. And Eurostat 50 futures down by 0.8%, but the FTSE 100 down by about the same margin. We've seen in the past few sessions a little bit of divergence between the two indices. Not today. The CAC Iran as well down by 0.8%. Anna, do you buy the dip, I think is the question.
Yeah, that's a good question. Let's have a look at some of the individual stocks and how they might perform at the open. IAG in focus from the aviation sector then, Kriti. We've got the airline business, parent of British Airways, Iberia and the like. They posted profits that beat estimates, and they're also talking about a €1 billion stock buyback. Stock buybacks seem to be a theme right now. Allianz, and I'm not sure that was ever any different, but Allianz certainly going along with that theme, announcing a new share buyback programme of as much as €2 billion. So we'll keep an eye on that PIMCO parent as a result. Their numbers also released for the market too. We got numbers from Holcim, the construction business. They've revealed some of the financials around their US spin-off, and also sounding quite upbeat about M&A opportunities and about the state of the US market and the US economy. So an interesting conversation there, Guy.
Do you buy the dip into a weekend? That's an interesting trade, isn't it? It'd be interesting to see how the market fares with that one. We're about to see the answer, certainly at the beginning of the Friday trade here in Europe. It's time for the opening trade. Let's show you some numbers. We're expecting some negativity. Remember, next week's a huge week as well. You've got a potential government shutdown on deck. You've plus also got the Chinese story to focus on as well with the MPC. So the FTSE's down by 0.2%. IAG is going to be a big feature of that market. Wow, has that stock had a ride recently to the upside. Stock 600 is down by 0.3%. We're expecting more downside in these markets this morning at an index level. Single stock story could be quite interesting. There could be some real divergence that you're going to see this morning. Could take a while, though, to get some of the main markets open. The DAX in particular, I think maybe takes a few minutes this morning. A little longer than usual, Kriti.
Absolutely. We're going to keep an eye on how all those shake out. But the early reads from the Stock 600 moves is that tech is not your friend today. ASML, Schneider Electric are your downside mover. You're seeing some extra pain in the chip sector as well. Joe Easton had mentioned this kind of move that we had seen when it comes to the read-through from some of what we saw in the Philly Semiconductor Index yesterday as well over in the States. But that seems to be what's dragging this market down. You've got a little banking down there on the downside. You have a little bit of actually yesterday's outperformers also pulling back in this morning's market.
Yeah, so real weakness in the technology sector. It's interesting that, we had the NVIDIA numbers to price in yesterday, but then NVIDIA was really weaker in session than it had been in after hours, in fact, yesterday, and so perhaps that adds some extra downside. So we are seeing some weakness. Add to that the tariff story, of course, but really nearly all sectors are in negative territory this morning. Only two are higher, and that is utilities and telecoms, the classic defensive, but they're not up by much. Technology, the worst performer. Basic resources also looking pretty weak this morning. So we see the likes of Antofagasta, Rio Tinto, Glencore, all down by more than 1%.
Haven't got a price on IAG yet. It's expected to open circa plus 5%, I think, on the back of its numbers. We'll talk to Luis Gallego in a few minutes' time, so we'll get his take on what is happening. But yeah, there's an index element to what we are seeing this morning in terms of the selling. ASML, LVMH, Novo, Schneider, SAP, all seeing some weakness. So it's tech and luxury. There's a few pharma stocks being thrown into the mix as well. The breadth is interesting. You've got 450 stocks down. You've got 114 up. So there's definitely a negative bias, a big negative bias in terms of the downside on the markets. But banks are doing relatively well. Some of the performers this morning, though, are the names that we've seen posting numbers. Holcim, in particular, posting some decent gains this morning in a market that is down sharply. It's up by 1.23%. So not a bad performance relative to expectations there.
Absolutely. Certainly something we're going to keep an eye on. We still have our eye on the DAX as well, whether or not that underperformance is going to show up as well. Let's bring in Laura Cooper, head of macro credit and global investment strategist over at Naveen. Laura, pleasure to have you on the program. And you picked quite the day to do it because we're trying to figure out what the pattern is here. I mean, we tend to see a little bit of a sell-off at the open on Fridays going into the weekend. How much of this is fundamental? How much of this is positioning?
I mean, I certainly think there's an element of positioning in this, given kind of these key risks that we're facing around tariff uncertainty. Do investors want to hold risk heading into the weekend, as you mentioned? But I think this is not an environment for de-risking. Perhaps it's just a case of finding those hedges to protect more of that downside. Because as you mentioned, that March 4th tariff deadline is looming, and we did see markets react quite strongly on the back of that yesterday.
Do you own it in going into the weekend? And I ask this because so many guests around our table come on and say the tariff risk is priced in. We know this was coming. This was part of the Trump trade. How much of that is true?
I think it's about being very selective in your exposures in these backdrops. I mean, yes, we could argue that 25% tariff coming through on Mexico and Canada, perhaps that's just a negotiating tactic. It's going to kind of have some kind of a deal or a delay. And even if it is imposed, perhaps it's going to be for a very short amount of time. Maybe markets are focusing on that China 10% tariff, the additional there. I think that was what was most surprising to markets, and perhaps that does warrant a bit more caution heading into next week.
Do I take less risk, though, in this environment?
Not necessarily, because if we take a step back and look at the fundamental story, the U.S. economy, yes, we're seeing cracks in that exceptionalism narrative, but overall the fundamentals still remain strong. The labor market is tight. Wages are decelerating. We are seeing signs so long as this uncertainty around policies continues to persist, that is feeding into consumer sentiment. That's the key risk that we're watching for at this juncture, but not enough to materially shake our expectation that the U.S. economy can maintain its resilience this year.
Maintain its resilience, but what is it that gets stocks higher from here?
That's a great question. I mean, I struggle to see what the catalyst really could be at this juncture, but I think it's about how you position. So are you going to take more of that broadening rotation within U.S. equities? Perhaps, given the valuation standpoint, if we are seeing quite an attractive, still fundamental growth backdrop. And as well, credit. I think credit is quite an ample opportunities existing there, given this backdrop of, higher for longer yields.
If we see this any turn in the credit cycle? There's no...
I think at this point, we are going to see modest widening in spreads. That's going to create more opportunities for re-entry points. But this is a backdrop where we look at the earnings picture, we look at cash flows, we look at defaults, are still projected to be quite low. There's not that exogenous shock to the market that we think is going to prompt a material turn in that cycle, as you mentioned.
And so, Laura, I just wanted to probe a little more on your expectations around inflation in the United States, because we've had, I found this, I've got a chart actually to show, which I think is really fascinating. interesting, and this is not economists and their expectations of inflation, but this is voters in the United States. And voters in the US have completely different perspectives and perceptions of where inflation is going to go based on their politics. And I wonder if that indecision is filtering through to the markets community. To what extent are people unclear about how Trump's policies are going to create inflation or not?
And I think that's a key risk that markets are trying to grapple with. What's been interesting is we've actually seen those inflation expectations on market-based measures come off quite meaningfully over the past few sessions. We did have that University of Michigan inflation gauge that did come in quite hotter. There were some methodology issues around that. So I think overall, when we think about the outlook for inflation, yes, there are the risks around tariffs coming through, but we are still in an environment where we're probably going to see more of that inflation progress persist through the end of the year, getting to about that 2.5% mark on that core PCE gauge. But what matters most to the Fed, and Chair Powell has alluded to this, is the fact that inflation expectations remain anchored. That in and of itself can facilitate this disinflation trend without needing that slack in the economy. So that suggests they're going to keep rates in this restrictive territory to kind of have that inflation on track.
OK, so that's the inflation side of things. And do you see any slack then developing in the US economy? You sound quite bullish on it, I suppose, but there has been this narrative developing this week. Well, two different theories about why we've seen yields coming down of late. One is that people are suddenly concerned about growth, and the other that people are suddenly convinced by Trump and Musk and Bessent and what they're doing around treasuries. I'm not sure which one you subscribe to, but are you nervous about growth in the US?
I think there's a degree of caution that is warranted. I mean, we saw investors really pile into that U.S. exceptionalism story. And yes, that still persists, but we are seeing signs of a moderation in growth backdrop. And I think that's what's getting investors a bit more nervous when we see this degree of policy uncertainty. It's not clear what's coming through on the tariff front, on the tax fronts, on the immigration front. All of this confluence of factors is feeding into that confidence channel, and that in turn could prompt a curtailment of that consumer spending, which has really been that pillar of growth for the U.S. economy. So it's the policy uncertainty that we're really watching for going forward.
You talked about the consumer confidence, some of the methodology there as well. We got initial jobless claims yesterday that came in a little hotter than expected in the survey. Not enormously, but just a little bit hotter. There is a question to your point of that policy uncertainty when it comes to things like layoffs, for example, from the federal government, when that's going to show up in the data. The economic impact of the LA fires, even the Hawaii fires, took a little bit to actually show up in the data as well. When it comes to some of that policy uncertainty, does this change the gauge of data that you're watching to trade?
I think we are watching more of those kind of survey data, kind of those leading economic gauges. Yes, we can rely on the payrolls print, which are still exceptionally strong, above 230,000 on that 3-month moving average. But yes, we want to find more of those timely gauges that capture kind of the sentiment on the ground, what those layoffs are coming through. A key trend that we saw in the recent earnings season was that layoffs were mentioned many times relative to previous seasons. So we do think that is going to have ripple effects in the labor market. I think the question, though, we're facing is, how much can the stock sell off before we see maybe a pivot coming through from the U.S. administration? Because previously in the administration...
So there is a Trump put. Do you think there's a Trump put?
I think that's the key question facing markets. I think the strike price this time around is lower than last time.
Okay.
But
where do you think it is?
How much more? No. It's about finding hedging opportunities to protect that downside.
Okay. I'm not sure the White House knows where it is. They just maybe know when the moment comes.
No, is it kind of 55? Is it 50? Anyway, Laura's not going to give you an answer on that one, understandably. Laura, great to see you.
Thank you.
Thank you for joining us on a Friday. Laura Cooper, Head of Macro Credit and Global Investment Strategist, joining us from Nuveen. Let's take a quick look at the core six, figure out what is happening there. There's quite a lot of negativity in the market this morning. As Anna's already pointed out, you are certainly seeing some of the tech stocks under significant pressure. As you can see, ASML is down by 3.5%, but all of this group are negative this morning. If you're looking for maybe a more defensive end to the market, look at Nestle, only down by 0.1%. Let's dig into some of the other stock stories. I see that IAG has now opened. Let's get some details with Joe.
So IAG is a decent gainer today, Guy. We're up around 3% at the open of trading. Now we're already up 15% year to date for a stock that's now gained 130% over the past year. They have got that buyback around €1 billion and also the jump in the profit, lifting that stock once again, boosting all of those buy-rated analysts we got on that one. So a big gainer for the London and Spanish-listed airline today. Then in terms of the chips weakness, as expected, we're seeing ASML, ASMI, ST Micro, Infineon, all of them extending those declines that we saw yesterday. As we said earlier, We did see weakness in the US session, feeding through into Asia overnight and now back into Europe once again. Lots of red on that screen. Then another sector seeing some red is over in the chem space. We got BASF down around 3% at the moment. They've got an update from the German firm. They're actually linked to the auto sector because they're saying that their coatings business, which supplies into cars, is actually the weak area, and that's why we've also got Valeo on the screen here, because the car parts maker cutting its guidance once again in France. Now, a couple of traders today were saying they thought a lot of that was priced in, but clearly not. We're down 8% at the moment for Valeo in France. Another weak day for that stock. A couple of profit warnings recently from them. Then in the cement space, seeing that one gaining at 1.6%. Now, bear in mind, that is a massive company. It's around a 50 billion market cap, so the 1.6% gain in this down market is actually pretty impressive for the company. That is, of course, looking to also spin out part of their North American business as well. That's the key thing. But that is a decent outperformance given the red that we're seeing on this market today. Another stock hit hard in France is Teleperformance. Take a look at that one. We're down 15% almost. This is the call centre company. It's been hit by worries about AI, potentially AI replacing people in call centres. This is the worry on that one. And we are seeing weakness in the margins. They've downgraded that once again. And that one hit hard in France, down another 15%. Heavy losses over the past year for that one. And finally, a broker move, a big impact from Bank of America downgrading Logitech, which makes all of the headsets and keyboards that we use around the office, and that one is downgraded on its valuation, and also weakness. Bank of America downgrading its earnings forecast for the company and saying the valuation is too punchy. And take a look at that. Bank of America analyst feeling pretty good for himself this morning as he sends the stock down 9% for Logitech in Zurich this morning.
OK, Joe, thank you very much. Joe Easton from our equities team on computer peripherals and other things. So a European session that is negative, down by 0.9% on the stock 600. Something that is bucking that trend, though. The IAG share price is higher this morning after a buyback announcement and a healthy profit beat. We'll speak exclusively with the IAG CEO. That conversation with Luis Gallego is coming up next. This is Bloomberg. Welcome back to the opening trade. Friday, 28th of February, and the European session is a negative one, as we have perhaps come to expect on Fridays, but down by 0.8% on the stock 600. Once again, spooked by a lack of clarity on the tariff agenda from the White House. So the talk overnight is of another 10% tariff going on China and a commitment to, as perhaps expected, next week implement those tariffs that had been suspended on Mexico and Canada. So those things, plus negativity around technology, basic resources are also weaker. All of that weighing on stocks this morning. Guy, let's go to the earnings story.
One stock that is not being weighed upon this morning is IAG. Excuse the pun, it is definitely flying higher. The company, as you can see, up 4.5% in a falling market. So an impressive performance being generated by the stock. It's had an impressive year. The stock is up significantly. And the question now is, does that continue into next year? This morning, quarterly profit beat analyst estimates. We've got a strong demand story, particularly in the leisure space. And it has announced a buyback of €1 billion. Joining us now exclusively is the IAG CEO, Luis Gallego. Luis, good morning. Thank you very much indeed for your time today. These numbers are being greeted by the market very, very warmly. The market likes what it's liking what it hears from IAG this morning. The stock has risen really sharply in 2024. Is there enough momentum in the business to carry you into 2025 to keep the share price doing what it's doing at the moment, which, as I say, is flying higher?
Yes, good morning. Yes, I think we continue seeing a very strong customer demand. What we see for the H1 is very positive. North Atlantic had a very strong performance in the last quarter of 2024, and we continue seeing the same behavior for the first half of the year. South Atlantic is also doing very well, and Europe, that is our third more important market, is also working well. So we don't see any weakness, and we don't expect that this year is going to have a very strong surprise.
Luis, load factors are very, very high. They're in the mid-80s. You're filling the aeroplanes at the moment quite nicely. Are you supply constrained at the moment? If you had more aeroplanes, could you fill them?
Yes, I think there is a lack of capacity in the market. The demand, as I said before, is very strong. We are managing the fleet, taking actions to minimize the delays that we are having from Airbus and from Boeing. But in 2024, we expected 20 aircraft, and we received 19, so only one 787 moved to 2025. For 2025, we are expecting 26 new aircraft. Maybe we can have some delays. There are some delays in the Airbus narrow-body and wide-body fleet, and also you know that Boeing is still trying to recover the production that they had previously. So we expect now the first 777X for 2027. But I think we are managing the situation, although we would like to grow more.
Luis, good morning. It's Anna here. That's one way of growing, getting more aircraft. Another way to grow is, of course, to add other businesses to your lineup. Luis, can I ask you about your intentions in Portugal, TAP or TAP? A lot of people focus on the future of that airline and your interest perhaps in it. Can you tell us anything about the timing of the conversations that you're having there?
Yes, I think we are waiting to the output of the process that they started. We think that in March we are going to have more information. We always said that TAP can be a very good business to develop in the IAG group, but we need to see the conditions of the privatization. We know that they are having talks internally, and we'll see if we can be interested or not.
And what is the attraction there? Is it all about Brazil, or is it about the substantial Western European part of their business?
I think we can do in Lisbon, or we can follow the same strategy that we have followed, for example, with Dublin and London, and to have a dual hub strategy in the south of Europe, in the same way we have a dual hub strategy in the north of Europe. So Madrid and Lisbon, they are very complementary hubs. It's true that Brazil is a market where we don't have a lot of capacity, and TAP would be very good for us, but also they operate to other markets like North America and also former colonies in Africa. So I think it's an interesting business that I am sure we can develop, and to have a company in the range of profitability that we have the rest of airlines in the group.
Luis, it's Kriti in London. Let's talk about another market that is potentially coming back online. There's a question of whether Ukrainian and Russian airspace could be reopening. Does that present an opportunity for someone like you?
Yes, for sure. I think the several opportunities, I think, linked to that. First of all, if the airspace is open, I think we are going to have a better ATC environment that, you know, we have suffered. Last summer was the second worst summer if we look at the delays of ATC. And this is for several reasons. But one of them is that part of airspace is closed because of the Ukraine situation, and that's something that can be improved. Another thing is the flights to Asia. Previous to COVID, 8% of our capacity was in Asia. Now it's around half of that. And one of the reasons is that to fly there, we need 2-3 hours more, and it doesn't make sense when you have to compete with other airlines that they can fly through Russia. So as soon as the airspace is open, we will reconsider to resume the operations to some destinations that we needed to cut.
Luis, what kind of additional assurances do you need for that? If you do get that peace deal and you do get that reopening of the airspace, what else is a green light for you to resume those operations?
No, I think we need to be sure that to fly there is going to be safe. I think it's not only the right to overfly. It's also if you have, for example, a technical incident and you need to land in Russia. So we need to evaluate that, but we have a extraordinary team that they are going to look at that. And as soon as it's possible, and when we have also availability of aircraft, that we said before that there is a lack of aircraft available, I think we will resume the operation.
Luis, you talk about a lack of aircraft. Another thing that the aviation industry is lacking right now is sustainable aviation fuel, SAF. We've started to see the blending coming in. The mandates are now being applied. SAF remains incredibly expensive, and there simply is not enough of it. Do you think the mandates are going to have to be watered down? Do you think the targets are realistic at the moment? Do you think that actually some of these issues are going to be harder to resolve and going to take longer to resolve in terms of fixing the supply chain around SAF?
I think mandates are not enough in order to produce SAF. So this year we have a 2% mandate, and in some way this year is going to be easy because we can achieve that amount. But the problem is going to be the future, as the mandates are going to be higher. So we need production of SAF, and the mandates are not working in isolation. So that's the reason we are pushing here, for example, in UK, a revenue certainty mechanism in order to have enough investment to produce SAF, because the problem is we have a lot of demand, but we don't have supply, and the price of SAF is still very high.
Yeah, it's 2 to 4 times higher.
Yes.
How much does that need to come down in order to make this realistic? What do you think is a reasonable price? Because this is the debate within the industry. The big oil companies say we're not going to produce it because the airlines aren't willing to pay the price, and the airlines saying, well, you're not producing it, so we can't do anything about that. So how does this get changed? What do you think needs to happen now? Because it's getting really important. The price is still too high. Consumers won't pay that. So you talk about the kind of the price guarantee mechanism. How does that change?
I think what is also very important is to have a level playing field, because what it doesn't make sense is that in Europe we have mandates, but in other parts of the world they don't have mandates, because at the end aviation is a global business and we need to have a common playing field. So I think SAF is a solution that we have now in place. I think it has to be much more affordable, because at the end, the excess of price that we are paying, we need to transfer to the consumers, and we don't want at the end that fly is going to be a right only for the rich people. I think all that we have seen in the last 25 years has been positive to have more people flying, and this lack of SAF can go in the other direction. That is going to be very expensive to fly.
Luis, always a pleasure. The shares are up nicely this morning. The numbers are going down well. IAG's CEO, Luis Gallego.
Let's talk about another earnings report we've had out this morning. Shares in the French car parts maker Valeo are moving lower this morning after reporting their earnings. We will be speaking exclusively to the CEO of that business, Christophe Perriat. That conversation coming up next. This is Bloomberg.
Welcome back. Let's take a look at where we are in terms of the trade. We're 30 minutes into the session. We're down by 0.5% here in Europe at the moment. In some ways, you could argue that relative to expectations, that is not a bad performance. It feels like a sort of holding pattern the Europe's in this morning. To a certain extent, Kriti, we got some of this price yesterday. We already were kind of aware of some of the risks. And going into the weekend, I think people are just sitting tight.
Absolutely. A little bit of risk off, a little bit of catch up as well. And then, of course, we don't really know what not only the geopolitics that are coming out of the United States are going to bring, but, of course, how that's going to shake up in Europe. Remember, we're still dealing with a lot of geopolitics and election fallout here in Europe as well. Let's check in on, however, one company that's catching our eye this morning, specifically Valeo. The shares are down about 10% after their earnings release. Now, look, their fourth quarter revenue did come in higher. I'm looking at a $5.41 billion number. The estimate there was $5.3 billion. It has boosted their full year results a little bit higher, but it seems to have cut its revenue forecast for the entire year. That seems to be what's weighing on shares to the tune of about 10% this morning. The CEO, I'm pleased to say, Christophe Perriat, joins us now for an exclusive conversation. Christophe, a pleasure to have you on this program. We thank you so much. Can you just walk us through some of these numbers that we're getting, especially when it comes to that revenue forecast? Seems like that's what the market is responding to.
Well, the market of automotive has been quite low and quite uncertain in 2024. There's been market stagnation. There's been, some customers going up, some customers going down. As you know, BYD going up, Stellantis going down, for instance. There's been quite a lot of start of production of new cars as well being postponed, from 24 to a later time. So this has impacted our revenues. At the end of the day, we have revenues at 21.5 billion euros. We were expecting more at the beginning of the year. But nevertheless, what is important is that despite this uncertain market, despite all the challenges in the automotive industry that you're well aware of, we've been able to increase our profitability in 24, as we did in 22 and 23. So it's now the third year in a row where we demonstrate that we're overcoming these challenges of the automotive industry and managing to improve our profitability.
Well, Christophe, speaking of that improvement, how is your manufacturing ability perhaps changing around not only addressing some of the challenges that you just mentioned, but perhaps an expectation or at least some comments coming from fiscal governments around Europe about a big kind of fiscal spend that's coming down the pipeline? How does that change your strategy around your manufacturing capacity?
Well, we have been adjusting our manufacturing capacity. We've been deciding for some reorganization of the company. We've been closing down a few plants here or there. I mean, this is not things that you like to do, but they are things that are necessary to be done. We've done that. We took it in our net result in 2024. But we're making this adjustment in our manufacturing footprint, and we'll continue to do it when and if necessary, of course.
Christophe, we are talking about a lot of geopolitical volatility at the moment and a lot of economic volatility as reflected in threats of tariffs, perhaps the reality of tariffs in some parts of the world. I wonder how you're, as a business, planning around tariffs when it's very difficult to plan around things you can't see or don't know about yet. But what are your expectations for how this will impact your business?
Well, I mean, absolutely. It's extremely difficult at this point of time to know if, when and how such tariffs might be implemented. The situation is quite complex because even if you try to find out and understand which tariffs will be implemented, you don't know what kind of retaliations will happen in other countries. So it's a very complex environment. And we are an industrial company. We have more than 170 plants, in the world. There's no way our manufacturing footprint will change, in a night shift, or will even change in a few weeks or in a few months. It's going to take years, to change any kind of manufacturing footprint. As a consequence, we have to make things as simple as, in fact, they are. Whatever cost Valeo will have to pay if tariffs are implemented, we'll seek and we'll get 100% compensation from our customers. Because there's no other option, because that's the way to go. Because the whole automotive industry is going to do that at the same time. So we have already communicated to our customers around the world new price list, that will be implemented as soon as any tariff would be implemented. That's the way the industry is going to work.
So it's as simple as that, is it, Christophe? That you are confronted with tariffs and you pass that on to customers, sort of euro cent for euro cent. Your business does not take it on the margin at all. Customers will pay. What kind of response have you had from customers on that?
Well, I think we've been talking already to our customers in the last weeks, in the last months about this. I think they understand. They know what kind of margins the automotive industry is working with. They know the margins that the automotive suppliers are making. They are very much aware of our manufacturing costs. We have all kinds of discussions with our customers on breakdowns. We've been going through the inflation waves. We've been disclosing, the detail of our costs. All this is on the table. All this is absolutely well known. So I think there's opening. There's,
some open discussions with our customers on the topic. They know that there's no other option than to push up the cost from the supply base to the OEMs in the auto industry.
Christoph, good morning. It's Guy. Some in this industry have decided that they are going to stick with ICE engines and hybrid engines longer than they originally anticipated. Do you think others in the industry will make that similar decision as well? Do you think ultimately the current targets set by governments, set by the EU, are too strict and will need to be changed?
Well, I mean, the world has to decarbonize, that's for sure. The mobility has to decarbonize, and obviously electrification in the mobility sector is the way to decarbonize the mobility. Now, looking into 2035 specifically in Europe, as you know, there's a strategic dialogue that has been opened by the European Commission. I will be in Brussels, next Monday to meet with the president of the European Commission in a meeting to discuss about these topics. As far as Valeo is concerned, we are very pragmatic. We see that there's some resistance from the customer base at the end of the day on pure BEV. And for instance, the introduction of some dose, some volumes of plug-in hybrid, for instance, might be a good complement to the existing policy, just to take into account what, at the end of the day, you and I mean, the customer base wants to buy.
So you think hybrids should be included? Is that the message I'm hearing?
Yeah, absolutely. I think that, enlarging the strict definition that today is part of the European agenda, it means 1% BEV, because at the end of the day, this is what it is. But including, a plug-in hybrid or qualifying plug-in hybrid as being possible, allowed beyond 2035 would make sense.
Christoph, great to catch
and
up.
Obviously, I'm talking about plug-in hybrid with enough range.
Yep.
Thank you.
No, yeah, okay. Fair enough. Yep. No, totally. Christoph, we'll leave it there. Thank you very much. Christoph Perla, the CEO of Valeo. Thank you very much indeed.
Interesting corporate conversation yesterday. Interesting political conversations taking place in Washington yesterday. Yesterday. President Trump says that Britain could avoid tariffs if a trade deal is reached, and said he would restart long-stalled negotiations with the UK. This, as British Prime Minister Keir Starmer heralded a new economic deal between the two countries.
The United Kingdom is a wonderful country that I know very well.
Our countries have been bound together for a very long time now. The closest alliance, I think, of any two countries when it comes to prosperity and security. And our trade, obviously, is fair and balanced, and in fact, you've got a bit of a surplus, so we're in a different position there. And obviously, we contributed hugely in relation to Ukraine, and taken together with Europe, there's about 50%.
It'll work out.
Does that mean there won't be any sanctions on the UK then?
Well, I have to take a look. The British have been incredible soldiers, incredible military, and they can take care of themselves. But if they need help, I'll always be with the British, okay? I'll always be with them. If you want peace, you have to talk, both sides. As I discussed with Prime Minister Starmer, the next step we're making is toward a very achievable ceasefire.
It can't be peace that rewards the aggressor or that gives encouragement to regimes like Iran. We agree history must be on the side of the peacemaker, not the invader.
I think we'll have two deals. I think we'll have a deal on ending the war, and I think we're going to end up with a great trade deal with you.
Some of the highlights between President Trump and Prime Minister Keir Starmer just yesterday in Washington. Bloomberg's Lizzie Burden, of course, listening to all the details and can take us through what we learned. Lizzie, we'll get back to the UK-US trade deal shortly, because that's an important development coming out of this visit. But there was also a lot of news flow around Ukraine, and so what was and was not achieved there, I suppose, is the question.
Yeah, I mean, for all of the wooing that Starmer the Charmer tried to do, and you saw it there in terms of trying to invite Donald Trump to the UK for a second unprecedented state visit. He gave him a handwritten letter from the King, which Trump accepted on the spot. It comes down to that number one demand. on Ukraine, which of course is for a US backstop for British troops in a peacekeeping force. In other words, air support, intel as well. And actually Trump's response was very coy when it came to that. He said that he doesn't want to talk about peacekeeping until a deal is done.
Too soon to have that conversation.
Exactly. It's kind of out of sync. Well, why are you doing the meetings in that order, you might ask? He says that having US companies on the ground mining for rare earths in Ukraine is enough of a deterrent to Putin, and that he's confident Putin isn't going to renege on a deal. Well, Europe's not. Right? There was a bit of a melting of the ice cap, shall we say, when it came to Zelensky. Just take a listen to what he had to say about him.
Mr. President, do you still think that Mr. Zelensky is a dictator?
Did I say that? I can't believe I said that. Next question.
And indeed, the British papers trying to take the hope from the ambiguity off the back of that.
Let's just talk about where we are. It's often referred to as a special relationship. It was fascinating to hear Trump talk about the idea of a trade deal. Is that actually what the British want from this special relationship? Do they want something as broad as that, or do they want something maybe a little bit more specific?
Well, I think what the British do not want are tariffs. And, of course, we're looking at Europe facing 25% tariffs on goods, including autos. It's a relief, especially for UK growth, Starmer's top priority, not to be facing those tariffs for now. It makes the relationship with Europe very tricky, given that Starmer is trying to repair ties with Brussels post-Brexit. And as you suggest, we have to wonder what's going to be the terms of that trade deal. There was another moment in this press conference where J.D. Vance spoke up, talking about free speech and the state of it in Britain. And that was the one moment where Starmer actually chose to correct the US side, doing a Macron. So is there going to be a demand for special terms for social media giants? You have to wonder. But in terms of the state of the special relationship, it is hopeful that you've got these hints on a US-UK trade deal and as well on Chagos. So Trump signalling that he's going to back Britain's position there. It'll be interesting this weekend, after Zelensky's had his own trip to Washington, for all of these European leaders, including Zelensky, we just reported, when they convene in the UK to compare their notes on the new relationship and the outcome for Ukraine.
Defense, of course, a key piece of that agenda. And again, also aside from the tech story that we know J.D. Vance talked about and the farm goods as well, agricultural products there. Bloomberg's Lizzie Burton walking us through the impact on that special relationship.
Coming up on the programme, we look ahead to the 97th Academy Awards this weekend and preview who could be taking away the coveted Oscars as Hollywood prepares for the biggest event in show business. More next. This is Buyback. Welcome back to the opening trade, 8:47 here in London, Friday the 28th of February, and it's a negative session, but not down as much as we were, though, is probably the headline here. The CAC 40 and the Xetra DAX getting the worst of the losses, down 6/7%. But we were down lower earlier on. We're waiting for key data then, Kriti, out of the United States, waiting for key geopolitical developments today in Washington and then in London over the weekend.
Absolutely. Plenty of economic data to keep us entertained, keep us on watch. Until then, we did, of course, get the French CPI numbers at 10 a.m. UK time. We get the Italian CPI numbers as well. But throughout the morning, some of the regional data coming out of Germany. But the big one you want to watch is at 1 p.m. UK time when we get that German CPI. So that's going to be a crucial one. But then the data deluge continues about 30 minutes later, 1:30 p.m. UK time. It's that U.S. PCE story. You get personal income, personal spending figures as well. Bloomberg's Valerie Titel is here to walk us through it. I know we're supposed to pay attention to PCE, but could the income and spending numbers be what the market reacts to more?
Look, I think right now the market is reacting way more to what's coming out of Trump in terms of tariffs. But this PCE number, it is what the Fed looks at, so the market does look at it as well. It's expected to show a tick up from the December's number, from 0.2% to 0.3%. But again, let's hope that this print doesn't have any whiff of anything hot, because we want to have a stable equity market ahead of this weekend. We know there's going to be rife with tariff negotiations. That March 4th date really staring us down the barrel and adding to the pressure more that he's just thrown in this extra tariff on China.
What's the market more worried about right now? Growth or inflation, though?
No, recently it's definitely been growth. I mean, the recent
data... When you
say
recently, the last few days?
Last 2 weeks. I think ever since that retail sales miss, the biggest miss in 2 years, the market's flipped to be more sensitive about any growth upsets. But, the next big one could maybe be a shock from a retaliation when it comes to China. Because the thing about this additional 10% on China that he's just thrown in there is it's not really clear. Is the Trump administration even talking with China right now? We know he's already talking to Trudeau. He's talking to the Mexican government about getting what he wants out of the 25% tariff threat. But it's unclear whether the Trump administration is in any direct negotiations when it comes to China and reducing the trade balance there.
Can I just throw something else in? Government shutdown. How's the market feeling about that? It's just another massive risk, and people are talking about a long shutdown potentially here as well.
Honestly, I think for the market, it's too far away. We already have the tariff negotiations to take place, given the reciprocal tariffs on April 2nd. I just think there's too much for the market to focus on in terms of trade negotiations to be worried about that right now, because the thing that market has a very hard time pricing in these brinkmanship episodes until they actually happen. And with that one maybe the farthest away, I think that the market has taken its eye off of that at the moment.
But you said those growth concerns have come up in the last 2 weeks, basically in the same move that we've seen, a 40 basis point move in the 10-year. How low can that yield go?
Well, look, when the Treasury Secretary tells you that he thinks Trump policies are going to move yields lower, they move lower. So I wouldn't really want to stand in the way of that if you have the biggest seller of Treasuries calling for a Treasury rally based on a government-led policy. But look, we do have some more economic data next week to come, one of them being the big jobs print next Friday. We also have ISM services and manufacturing. If we do see another miss when it comes to a services indicator, I expect Treasuries to be bid. But it's interesting to see, Kriti, that from the equity side yesterday, Treasuries were seen as the risk-off hedge, and that's not always been the case. So we are seeing that kind of correlation between equities lower, bond yields lower, resume at the moment.
Valerie, thank you very much indeed. Valerie, walk us through the markets into this weekend. Talking of the weekend, critically, no rugby, so there are other things that you can focus on.
There's other sport here, but apparently it's not rugby.
It's not rugby. It's not rugby. Well, there is rugby, but not international rugby. Anyway, Milan Fashion Week, worth paying attention to. Nordic carnivals, you want to pay attention to that. That could be amazing. You've got the oranges battle.
Tell us more about that, Guy.
Go on. Make me do that.
Or maybe the England-South Africa cricket.
There's cricket. We can focus on the cricket. We can talk about some sports that is worth paying attention to. That I don't actually want to spend too much time talking about English cricket
over
right
the
now.
Battle of the Oranges. Come on.
Yeah. Maybe we'll do some more research on that.
Do you want? I haven't done enough research on the Battle of the Oranges, and I also probably haven't done enough research
on the Oscars?
On the Oscars as well.
Let's move to that, though, because as we've been mentioning, preparations are in full swing for the 97th Academy Awards this weekend in Hollywood. Joining us for what to expect is Bloomberg's Daybreak editor, Mark Perrier, Daybreak editor and aficionado internally on the Oscars.
Yes.
Big enthusiast, of course, for all things glitz and glamour. Mark, tell us a little about, though, the mood of this event, because before we get excited about who might win and all of the glamour that goes along with this, there's the serious business of this being the first Oscars since the fire, and perhaps that weighs on the mood a little.
Absolutely. And the organizers, I think, have to strike the right balance, being respectful of the moment, but also providing the audience with the glitz and entertainment that we always expect. They have indicated that they'll have firefighters involved, or at least they'll salute them on stage. Conan O'Brien, the host, has a very tough job ahead, and he's also indicated he'll be very respectful of the moment. The writers on this show are so nimble and smart. They'll be writing up the material right up until it actually starts, and through the show, reading the temperature.
To keep it current.
Can we go to the fun stuff now?
Yes.
Because this is, of course, a very big deal. I think in years previous, there's been a thought of whether people are even watching the Oscars, whether they even matter at the end of the day. What do you think?
Some people do, some people don't. Certainly the viewership has come down over the years, but I think that's more reflective of viewer habits. Social media plays a big part now. I think they do push that. But the Oscars are the Oscars. It's the biggest event in the industry. It's one of the few things that brings the world together. Everyone loves the movies.
The movies industry has changed, though, dramatically over the last few years. Big streaming companies now a big part of the landscape, yet never really reflected in the Oscars. When is this the year that changes?
It was supposed to change. Netflix has been nominated, I believe, 10 times for Best Picture. Hasn't won yet. Their biggest chance this year was Emilia Perez. Unfortunately, the chances have fallen because of controversy surrounding one of its leads. They're still hunting for the Best Picture Oscar. It's not happening this year.
OK, so let's get to the nitty-gritty here then, Mark, about who's actually going to win. So you mentioned Emilia Perez, and that was, that got a lot of nominations, didn't it? But now things have changed. The narrative around that certainly seems to have evolved. What about others then in the mix? I mean, Anora's done well in other award ceremonies. The Brutalist is just extremely long, so I have not seen that.
It's very long.
I struggle to stay awake that long. Your thoughts? What's going to do well?
My picks, Best Picture will be Anora. It's just going in with the right momentum. Conclave could pull the upset. That would be my number 2 choice. My money is on Anora. Best Actor, Adrian Brody for The Brutalist. And Best Actress, Demi Moore, coming in with renewed momentum after winning at the SAG Awards. It'll cap her career, her comeback, and Hollywood loves a comeback.
Who's staying up for this?
You haven't even mentioned Wicked.
Well... Yeah.
Come on, Mark.
It's on the list.
It's nominated.
They are performing songs, apparently. There's a medley of songs to take place on stage.
That's always Guy's favourite.
I will definitely stay up for that. Absolutely.
Sounds good. Bloomberg's Mark Perrier giving us everything we need to know about what's going on in Hollywood. We thank you so much. Let's get a quick check on these markets, though, because it is Friday. We did kick off the show with some fairly poor risk sentiment. Look at that risk sentiment has paired some of those losses, but still very much in the red. Stocks Europe 600 down about 0.6%. But you're seeing a similar story across the DAX, the CAC, and even the FTSE 100 as well, down about 0.3%. But this is a weekend story. This is a fundamental story. This is a positioning story. Do we see buying on Monday?
A lot of risk over the weekend. I mean, US futures look flat to positive, don't they? But there could be risk. I mean, some of it's geopolitical, which is difficult to match to markets, maybe. But a lot of developments around Ukraine could be anticipated over the weekend.
Bitcoin's trading with a 78 handle.
Yes.
And it has continued to fall throughout the session. It will trade over the weekend. We will continue to... that's still kind of... As you go through this weekend and you think about how you monitor risk, it's going to be fascinating to see how much lower that could go. 76, I think, is a key line in the sand as well, so people will be paying attention to some of those key levels as we approach Monday again.
You've got your eye on crypto. I've got my eye on Eurodollar because we're now back at a 103 handle, and I wonder if that kind of dropped to parity, if we're talking about tariff conversations, comes back on the agenda.
We spent a lot of time in South Africa this week, haven't we, at those G20 meetings. They've been ongoing. So on a programming note, I should tell you that we're going to be showing our monthly show Next Africa. That is airing tonight. Our first episode of the year takes a deeper look into how President Trump's return is rattling the continent. So certainly don't miss that one. The markets then are weaker this Friday, waiting for PCE. This is Bloomberg.